Hello traders out there and trader land. My name's Dez here at Grok Trade. This is the weekend edition. And wrapping up the week and month, we have the S&P down a fraction, the Dow down a fraction with the Nasdaq up a 13-year high, up 0.4%. The Russell's up 0.14%. Banks, though, in negative territory. And we have gold up 1% with 1.5% rise here on silver. But the VIX, Volatility Index, is spiking higher by 5.6%. We are now over 13, gang. That is problem city. Anyway, crude oil up 0.8%. And you'll see here we have Apple up 1.85%, drop here on Google, 1% plus on Facebook. We have LinkedIn up 0.4% and Twitter up 1.6%. Anyway, take a look here at the S&P daily. Here's the problem. Problem has to do with divergences. So we have a big rising wedge, big time bearish. Go to freeonlinetradingeducation.com, freeonlinetradingeducation.com, longest URL in the world. Click on Chart School, go to Rising Wedges. You will find that the rising wedges are, in fact, more bearish than they are bullish. But let's talk about the divergences. So here we have a higher swing high back here in July, and we have a lower swing high right here, same time period. And you'll see that is a divergence, one going higher, one going lower. And the markets crashed right after that. So that is called a bearish divergence because the markets did go bearish after that. And you'll see here on price action, we have a lower swing low, which is bearish, but we have a higher swing low, which is bullish on the MACD. And you'll see that the markets went bullish. It's one of the only indicators, technically it's an oscillator, and technically it is a centered oscillator, is one of the only ones out there that can be considered a forward-telling, future-telling indicator oscillator. So here you'll see that we go higher, 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 higher. Here, but we have a lower swing high, and with a higher swing high here, lower swing high, it's bearish divergence, so that means we should go lower. So if you go here to a weekly chart, you'll see on the weekly chart we've been going higher, 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 higher. On the week, we dojied out. Usually a doji after an extended run is in fact a problem. So it could be a reversal pattern and we could start heading down. The problem is we didn't hit resistance. We should have got there. We missed it here. It looks like we're getting ready to miss it again here. It's relative weakness and it should drop. So again, another ominous warning. Take a look at the monthly chart. We hit here, little drop, we hit here, little drop, we hit here, drop, big drop, then we hit here again. So this thing has been tested multiple times and this market could now drop. So again, another warning, a warning at resistance on the monthly chart, a warning because we're missing resistance on the weekly chart with the doji after an extended run, and we have a daily chart with a big, fat, ugly looking rising wedge with the bearish divergence on the MACD. So you're hearing it here. Here's your big fat warning that the markets should drop relatively quickly. Now, and it will certainly be a catalyst if the Feds come out and do what they said they might in December, saying that the markets are healthy enough, or the economy is healthy enough that we're going to start pulling back some of our stimulus. If we do that, we're expecting a serious retreat here in the markets as a whole. If you look here at the Nasdaq, you'll see the Nasdaq, we poked our head over. So we have resistance, resistance. We're over that resistance, which is pretty bullish. We did have a bearish divergence, but we blasted through it. So as far as the technicals are concerned, on the Nasdaq, all looks well. Problem is, we're still at a resistance point, big resistance point on the weekly, so that could be problematic for sure. If you look here at the monthly charts, just up, 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 and away. Gang, usually you don't pull that far away from especially the exponential moving averages before you start to get some sort of pullback. So that could happen at any time. For you gold bugs out there, we have a falling wedge, and we did poke our head over the top of this. Remember, you can always go full screen to watch this in high definition, but we are on the bullish side of that resistance. If you look here at a weekly chart, you'll see that we're down here at a support level. Look for buying opportunities. Gold could be a buy, even though analysts out there are saying that expect a big time, significant 5-month retreat to the downside. I'm not sure if I buy that right now because I'm more of a technician and I see on the monthly chart we're at a support level. Watch for a reversal. Silver, same thing. Got a little pop higher after this base. We could go north bound. And on the weekly chart, a nice bull flag, kind of a deep retracement as far as Fibonacci is concerned. But look for a bounce off of this area if you can find it. And on the monthly, we're down here during support levels, and we could start to go bullish. Anyway, here's Apple. This is a monthly chart. As far as the Fibonacci, it's a big bearish drop with a little pullback. We're just above the 50%, so this is still big time bearish territory on the monthly. But the weekly is a high base breakout, but we don't have confirmation volume. But again, this is a holiday week, and we don't expect too much for the week. But for the day, we boom, 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 higher over now, a close above resistance. So Apple's looking pretty good there. Google here is up, and away, but we have hit resistance and we're starting to drop here. And if you look here at the weekly chart, it's just chugging to the north side, but on the daily it looks like it's going to drop. In the monthly, we have a nice little pop. Don't be too alarmed if you see that start to drift southbound. And Facebook, beautiful looking falling wedge. Watch for a breakout. And if you look here on the weekly chart, you have a beautiful bull pullback after an extended run with a hammer. So all you guys from the 80s and 90s, hammer time. Anyway, this is what we're looking for on an extended time frame here on Facebook. It looks like a time to buy. LinkedIn, same thing at a major support level on the weekly chart. On the daily chart, we have a higher swing high. Watch for upside potential. Twitter here. You know what? Just stay away from that for the time being. It's not looking that great. So with that, I will leave you with this one announcement. And that is, everybody is all geeked out about Black Friday that we are having or had, and all the big discounts that are out there. Well, anyway, I'm not doing that. What we have here is a big fat no special going on, the 201 trading videos. It's the best out there as far as trading curriculum. It's a home study you can take yourself, and that is great. Now, anyway, technically it's a $2,500 value. We were teaching similar things at Teach Me to Trade, Wealth Intelligence Academy, and Star Trader and Option Success, and also Rich Dad Poor Dad with Robert Kiyosaki. However, I put together in a very concentrated format a home study that you can get at a very low discounted price at $700. And you can take that as many times as you want to. It's a very tough course, and you can read all about it there. So PUI to specials, you're getting the best of technical analysis and the training there in the most packaged and best curriculum out there as far as we're concerned, but I'm highly biased in that, but I'm that way for good reason, and we hope you take advantage of that. Take care, safe trading, and we'll catch you guys next time.